Okay, so three stocks have been ripping as of lately today. Let's first check out Super Microcomputer, up 15% today. Now, this stock is down quite considerably, all-time high of 123. This is definitely a competitor for Nvidia. Year to date, still up 49%. 5 years up 1822%. 1 year, 45%. I mean, look at this revenue growth. 2 billion, 2.2, 2.5, 3.4, 3.5, 3.3, 3.5, 5.2. I mean, look at this astronomical growth. Triple from 2 years ago. Profit is, I mean, up 12 times, 13 times since 2015. What are analysts thinking about this? Big growth in earnings per share, 283 expected for this year, up to $4 in a couple. Listen, this is a pure AI play, but look at this. Wow, what is this? This is random. 25 billion, 32 billion, 36, a drop to 20 billion in revenue off three analysts. That is interesting. Now, this one is just going wild. I mean, you sit there and look at 3 month numbers. You have a high of 66, a low of, is that 1725? No, that was in November, but a low recently. I mean, this thing is all over the board. So let's see stock analyze. So let's see what I've done this in the past to see what kind of, I've only done this earlier this year. Okay, so we have 5, 12, 19% revenue growth, 5, 8, and 11% profit margin and free cash margin. And look at this. We have higher numbers here in the middle than we've even shown the last 10 years. So these are aggressive assumptions we're making here. 15, 20, and 25 on earnings multiple 10 years from now. Hit the analyze button. I mean, there's potential here. If you really believe these middle and high numbers, you got to take a look at this. There's a lot of potential here. The question is 12% sustainable for that long? And the issue is they didn't have 12% before this AI. Now, you might sit there and say, well, AI is growing like crazy. Yeah, but then a lot of more people enter the market. There'll be a lot more competition. Margins will shrink. These things do happen. So what's going on here? I don't know. Oh, one thing I don't like. Wow. Look at this. Net income last year of 1.15 billion. Free cash flow only 30 million. 5-year average net income, 612 million. 5-year free cash flow, negative 363. That is not good. We don't like it when this far off. So for me, it's kind of like, move on. All right, let's see the next one. UnitedHealth CEO yesterday steps down for personal reasons. A lot of things have happened this year for this company. Obviously, I don't need to get into that. The stock is down significantly from its all-time high back in November. Just in November, it was at 630. Is now at 309. 309. This is the one-day chart. This is today. 1 week, it's down 21%. 1 month, 47%. 3 months, 40%. I mean, this thing is just a mess. Huge long-term chart. Boy, look at this. 300 here. Last time I was at 300 was, what, December of 2020? Wow. All right, let's see. Now, these are insurance companies. They're private insurance company. There's obviously a lot of scandal going on there with them. But look at this revenue. 400 billion with 22 billion in profit, 14.4, 22. You underwrite these a little bit different than most companies because it's about insurance proceeds. Let's see what the analyst estimates are here. Wow, big growth, big growth in earnings per share from $30 all the way up to 50. So a lot of uncertainty. If you believe these numbers, $50, $30 today, it's selling for 10 times earnings for the estimate for this year. But I know they adjusted their let's see what their news is. Let's see what the news is here. Yeah, this is investigation of breach of fiduciary duties by directors and officers. And this is a month ago or so. So there's a lot of stuff going on here. I mean, this is, guys, this is one that if you're in the community here, have a discussion about this because you really got to believe these numbers. I don't know the last time I did UNH, if I ever have, because of the way they are. Let's see. Oh, I did it in April. I did this in April. And let's give my 9% return across the board for 10 years. I did reasonable profit. I mean, a lot of potential here, guys. A lot of potential. All green. Low price of 425. And back when I did this in April, what was the price? April 9th, I did it. It was, north of $550 a share. It was close to $600 a share. Now it's 300. It's also proof that anything can happen at any time with any given company that makes them plummet hard. And of course, Nvidia, big mover as of late, 135 a share. Year to date, ironically, it's still down year to date. But look at how much it has fallen. It got as low as $86 a share just a month ago. 5 weeks ago, it was $86 a share. Now at 135. This is a $3.3 trillion company fluctuating how much in 1 month? 22% here. I mean, this is insanity. Analyst estimates are nothing but optimistic. $7 a share here in 2030. Revenue growth, huge revenue growth here, going to $317 billion according to analysts. Guys, remember, great story. If you pay the wrong price, if you don't marry the numbers together, what are you left with? You're left with a terrible investment. So you got to be careful with these high flyers, especially when the news and the excitement's so high. I mean, let's look at these. 5, 12, and 19% revenue growth, 27.5, 35, 42.5 profit margin. They've crushed those numbers for the record. The question is that sustainable? 18, 22, and 26 on earnings multiple, 9% return. Even at those rosy numbers, guys, but it could do better. I'm a little apprehensive about it right now. This is up to you. Remember, if you believe these numbers, you got to take a look at this because the balance sheets are great. Remember, a stock analyzer does not involve the balance sheets, but it's been a very wild market lately. I mean, the market has been absolutely crazy. I mean, let's just go to QQQ. This is the NASDAQ Invesco QQQ. In the last 1 month, up 13%. Last 3 months, down 4%. 6 months, up 1%. Year to date, 1.5%. 1 year, I mean, it's just all over the board. This thing is crazy. So remember, we're always teaching this principle-driven investing where you don't determine if you're right or wrong based on short-term fluctuations of stock price. UnitedHealth is a great example of a company that can plummet very quickly from near 600 down to 300 in a matter of 1 month. This is the stuff you have to pay attention to. This is why we always use stories and numbers together in the stock analyzer tool to find the right price to pay for these companies. So guys, thank you very much for your time. I appreciate it. And we'll talk soon. Thank you.